Hi crypto kings and queens, welcome to my channel. My name is Natalie. In today's episode I will show you the difference between a counter trend line and a regular trend line that we're having. So I already have all of the drawings on the chart, so I'm gonna go through exactly what you can do to see. One of the tools that we can use is the counter trend line to see when the pullback is over, for then taking advantage to trade with the trend, because remember guys, the trend is your friend. But the counter trend line is really good for us to use to see when the pullback is over, so we can jump into a trade, either if it's a short position or a long position. Continue watching this video and I'll show you exactly how I see the counter trend lines on the chart on Bitcoin. Before we're going into how to break down market structure on the lower time frames, you can right now receive a bonus on the platform that I trade on myself. This is on Bybit. You can at this moment receive a bonus up to $30,030. Now it depends on when you are looking at this video, because the bonuses can change. You always have the link in the description down below my video for Bybit. This is a leverage trading platform. You have zero fees right now when it comes to spot pairs, and when you're holding up positions for a longer time, you have zero fees. You got multiple different cryptocurrencies here, which you can pick and choose what you want to trade yourself. So make sure to claim the best bonus available right now. So we're looking at the daily right now, but I'm also gonna use the 12-hour chart because we can see more clear on when the market actually is breaking the counter trend line. So counter trend line is the opposite to the trend that we're in. So that is the pullback that we're having. And in a pullback, for example, when we are in a uptrend, the pullback becomes a downtrend, and in a downtrend, the pullback becomes a uptrend. As you can see right here, we can see market coming back up, then you see the retracement, the pullback, and that makes the market breaking to the downside, creates lower lows, lower highs, until we're breaking this trend line and continue to the upside. So that is why it's really important that we understand what type of trend we are in. So we understand that when we are in a uptrend, when the market pulls back, the market is in a downtrend. So for example, right here, as you can see, when the market had the momentum to the upside, this is the impulsive move that we're having. This is the retracement. Impulsive move, retracement. Impulsive move, retracement move. Impulsive move, retracement. And this is actually where the market is breaking the uptrend, with breaking the previous higher low that we're having. And then we could see market never had the power to break this higher high, and market then breaks to the downside. But the most important thing right now when we understand the counter trend line is that's when the market is below the trend line in a pullback. So in this case, the market is below the trend line because it is a downtrend. So as you can see right here, because obviously, how do we know that this is a pullback? Well, we are creating lower lows and lower highs all the time. As you can see, eventually we're breaking it with huge momentum, and then market retested, and then you see the huge momentum to the upside. So that is what we're looking at when the market is trying to break the counter trend line, or when we want to see the impulsive move start again, is that we want to see the market breaking this counter trend line. And the same goes for the next wave. So on the higher time frames, we can see more clear on what's actually going on. So you have the retracement move, the impulsive move, retracement, impulsive. So when we're going to the 12-hour again, as we can see, you can see the market right here bouncing. So first of all, when this didn't happen, we had the market like this, right? Kind of. We had it like that. So the market actually broke this level. So it depends on how you have it, because you could see that we did create a high after this previous lower high that we did have. So it depends if you want to see if the market actually gonna continue back down. But you could see right here that the market never had the power to break this previous lower low that we did have. Market creates a higher high, market comes back down, creates a higher low, and then you see the break to the upside again. It depends on how you see it, but the market definitely broke it. You could either have it like that. If you were unsure, we could have taken the trend line like this also, just to make sure that the market is not trying to fake us out, because usually what happens when the market comes to the trend lines is that the market is actually breaking the breaking the trend line, doesn't matter if it is the trend line or the counter trend line, market fakes us out, tries to break it, but then comes inside again. So this is a clear breakout retest that we're having. You're also having two dojis against this, and this is the 12-hour chart. So on the lower time frames, it was you will see more opportunities to go inside of it. And it was actually the same here. You saw the market was below the trend line, the counter trend line. You saw the retest. So it was actually on the second retest that you could see the market continuing back down. Looking at this, we saw the market breaking this previous higher low, so that is telling me, well, the market might not go up right now, but what I need is a lower high, because we can't create a lower low but then breaking to the upside again, because the market is obviously never perfect. So the market did break, we did create a lower high, market comes back down, create a lower low because it's lower than this low, then market breaks the trend line, and then you see market continuing to the upside. You can, at this point, we're using different tools. So for example, we could have been using Fibonacci, and with that we saw the market actually coming back down to the Fibonacci and then continuation to the upside. So the counter trend lines is just one of the tools that we're using to see, is the market now breaking or is it gonna continue? But if you're breaking it and we want to have more confidence with going into a trade and see that this is actually the market is not going back inside of the trend anymore, then one of the tools that I'm using is the Fibonacci. So it's the same right here. You saw the market being below this trend line for a couple of times. The market did create lower lows, lower highs, lower lows, lower high, a previous lower low, a last lower low, then market breaks it. And then you saw market consolidate, but the market then broke to the upside the last time. This is why we definitely have to learn how to see what the market is doing against these levels and in between. And after that, you could see the market dropping. And we did break this previous higher low that we did have. Market came up a little bit, but we never had the power to break this higher point. Market comes back down, slams to the downside. So we're going to the daily again, and I want to show you exactly how it looks for when we are in a downtrend. So in a downtrend, the market is doing lower lows, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So in this case, when the market is going down, the pullback is when the market is creating high highs and higher lows, because that is not the trend. The trend is a downtrend, but the pullback is a uptrend. So we need to see when the counter trend line, when the pullback is over, that's when we can see the market breaking it, either on the lower time frames, depends on, because sometimes when you're having huge drops, you're just having small pullbacks, it depends. But in this case, you could also see the market creating high high, a higher low, almost not a high high, but then the market broke this counter trend line. You saw the retest of this trend line, and then market came back down again, did a small retracement move, market did the impulsive move, pullback, impulsive move, because we saw the market being in a downtrend. By looking at the candlesticks, you can see the market did break the uptrend. We did have a double top right here. We did break these levels, this consolidation also, but this was actually the last higher low. This was the last higher low that we did have, market continuing back down. And after that, market never had the power to break to the downside. So in this case, we knew that the market was in a downtrend. So the pullback that we did have was in a uptrend. And for me to go into a short position right now on Bitcoin, I need to see when the market is breaking the counter trend line. So this comes with patience. Sometimes you can trade a pullback, obviously, but I mean, rather have a great breakout retest from these levels. And sometimes the market is not even, you just might have to go back down to the lower time frames to see the retest of these levels, because sometimes the market is just slamming through it and then it just goes back down. But when the market is doing that, we obviously can see the market is continuing to either direction to where it broke from. And after that, we're just looking at new opportunities. What I want you to understand is the counter trend lines that we're using in the market. So remember that the market is in a uptrend right here. The counter trend line is where the pullback is. So the market is below the counter trend line until it breaks it. Most of the time, retested, continuation. Market is below the counter trend line until it breaks it and continues with the impulsive move. Market is still below the counter trend line until we see the market actually breaking it. And the same thing goes here when we see the market in a downtrend. It's just the opposite. You see the impulsive move, you see a small pullback above the counter trend line. Market breaks counter trend line, breaks the counter trend line, creates a counter trend line, breaking. This is very important when we're looking at the chart. Remember that for myself, trend lines is just a tool that I'm using to see when we're seeing the breakouts, the retest, if we're getting faked out, because trend lines overall is super good to use on the charts because they've super respected when it comes to them, more than support and resistance levels. And obviously it depends also what type of time frames you're looking at, because the higher time frames obviously the better. But this is what I want to show you. I hope you understood the concept with counter trend lines and regular trend lines. Remember, a counter trend line is where the pullback happens if you are in an uptrend or in a downtrend. So it's really important, but you can definitely use them to see when the pullback is over, for them to take advantage and follow the trend, because trend is your friend. Remember that. So thank you so much for looking at this video. I hope you enjoyed it. Subscribe to the channel because I'll have multiple live streams during the weeks, and I also have daily updates about cryptocurrencies, and sometimes I put up these education videos, and I hope you enjoyed it. Please comment below if you did understand about this. Comment below if there's any other video that you want me to look at, and I hope you have a good day. Mwah!